Hey folks, my name is Doug, and I'm here today to introduce my dividend portfolio on M1 Finance. First, let's talk a little bit about the goals of this portfolio. Simply put, the plan is to hold great companies for a long time and have them appreciate in market value, but also reinvest the dividends they pay back into the portfolio to further grow our positions. The name of the game here is compounding growth. You may have also heard of it be referenced as the dividend snowball. M1 is not affiliated with this video in any way, but I do think that their platform is great for this kind of investing. There'll be a link to the portfolio in the description of the video if you want to dive in more detail or set up an account with them yourself. As you can see, we have just over $32,000 currently invested into the market, and we're up about 13.5% year to date. This portfolio was created a few years ago, and honestly, I didn't really contribute much to it since then. I've just let it grow and reinvest dividends automatically, purchasing more shares as time goes on. But today I'm going to make a change to that and start investing weekly on an automated schedule and track this portfolio's progress over time. If we look quickly at our investing plan, it breaks it down very clearly. $350 per week, $1,400 a month, or just over $18,000 a year contributed into the portfolio with additional contributions as we see fit. We don't want to stretch our budget too thin here. If we have a look at our portfolio on M1, we can see that our value over time has been relatively, stable. We have a big jump toward the end here, and that's from a transfer from another brokerage. So we transferred over about $13,000 or $14,000 into this M1 account via some shares, some cash on hand. So we have about $3,000 in buying power currently. But if we jump down here into the slices, this is how M1 kind of slices up the portfolio. So it's done by sector in this case, but there's many ways to go about it. I'm going to jump in briefly to each sector in the portfolio. Not going to deep dive into any particular company, but this is just to provide context into where the portfolio currently stands and what positions we hold. Under real estate, you can see we have just over $8,000 currently invested, and the two holdings that make up this slice are Stag and Realty Income, both monthly dividend payers, so I like to have them in the portfolio. If we jump into the technology sector here, this one is a little bit different than the rest of the portfolio, as this is mostly centered on growth. While some of these companies do pay out dividends, the yield is relatively low, but their growth potential is very high. So I don't mind holding them in the portfolio, and I plan to do so for quite some time. The only thing that might be up on the chopping block is Facebook. They had a killer, earnings report, but I don't know if it fits the theme of the portfolio long term. So we'll have to readdress that at some point. In our income funds, this is split between SCHD and JEPI. I've recently changed these to be 75% weighted toward SCHD with 25% remaining to JEPI. JPI might not be long-term holding in this particular portfolio based off the tax implications of how they pay out their dividend. Under consumer, we have a lot of your typical, well-known companies. We have your Coca-Colas, your McDonald's, Pepsi's, Altria Group, Walmart, so on and so forth. In this particular slice, Warner Brothers is probably up on the chopping block. It doesn't really fit the goal of this portfolio necessarily. And I'd like to cut down on some of the positions just overall across the entire portfolio, just to make it a little bit more manageable. Under financials and fintech, we have your JP Morgan Chase, MasterCard, Visa, M&T Bank Corp, Main Street Capital. Under energy, this one's pretty straightforward. We have Exxon and Chevron split 50-50 down the middle. Both of these are great dividend payers with a lot of potential upside as well. Under utilities, again, pretty straightforward. We have American States Water Co. and Consolidated Edison. In our industrial slice, we have Caterpillar, 3M, Amcor, Dover, and Emerson Electric. 3M is currently they're under some pretty heavy litigation. I need to do a lot more research into it to determine if I want to keep this weighted at 20% or not. But for the time being, I don't mind holding it, as the goal of the portfolio is to hold all of these companies for quite a while. Under healthcare, we have AbbVie, Johnson & Johnson, Cardinal Health, United Health Group, and Pfizer. And finally, under telecom, we have AT&T and Verizon, both getting hit pretty hard in the market recently. But both are pretty good dividend payers. and it only makes up 3% of our total portfolio. So I don't mind holding the positions that we have. Will I ever increase that percentage? Time will tell, but for now, I don't mind holding on to them. Toward the bottom here, we can see some removed slices. These are artifacts of that transfer of, the brokerage into M1. So we had a bunch of BlackBerry and we had a bunch of Orion Office REIT as well. Both of these are getting liquidated and put back into funds for the next auto purchase. Speaking of which, we can view that in upcoming trades. So you can see those sell orders on the right-hand side, and on the left-hand side are all the buy orders that'll be done automatically Monday morning. So the bulk of this money is going to go into SCHD, just under half of it actually, with the rest, getting filtered down into the other underweight positions in the portfolio automatically. So it looks like we're going to be purchasing some JP Morgan, Consolidated Edison, American States Water Co., Main Street Capital, so on and so forth down the list here. If we look briefly under the activity for this past month, we'll call this the July update for all intents and purposes. So if I just filter this from the beginning to the end of July, I'm going to sort it this way, and we can see how our dividends are rolling in, what buys we're making automatically, and other information in here as well. So starting on July 3rd, we had a $1.46 payout from Coca-Cola. We had an automatic buy, so we purchased just over $23 into SCHD and just over $3 into JEPI. Following that, on the 7th, we had JEPI pay us out $12.44. Altria Group pay us out $4.11. Philip Morris, $2.78. We had a little bit of interest accumulated from whatever cash position we had at the time. And then further down, July 14th, Realty Income paid us out $3.91. Main Street Capital paid us out $1.45. Cardinal Health paid us out 60 cents. Stag paid us out $3.48. And then we had a couple more buys, just under $2 into Verizon and $24.53 into AT&T. It's important to note that these buys are automated through M1, and they'll automatically invest cash into your underweight positions in your portfolio. This cash account transfer was part of that brokerage transfer originally, so it was about just over $600 there, as well as some shares of Apple, BlackBerry, Coca-Cola, Orion Office REIT, Realty Income, and Stag Industrial as well. We also transferred over some VT Sachs. That had to get liquidated as well, as it wasn't able to be transferred over on a one-to-one basis between the two brokerages. So that's the month of July. If we go over to our spreadsheet very quickly, we can see that for the month of July here, we had a total of $30.23 paid out to us. So before we end the video, I wanted to do a quick, catch up essentially. So for the year of 2022, our dividend payouts from this portfolio equaled $683.83. Currently, for 2023, we're at $382.19 at the end of July. So we have 5 more months left. I'm assuming here that since we migrated a pretty big position into the portfolio, these dividend payouts will obviously increase throughout the rest of the year here. And that'll give us a good jumping off point to really see how we can scale this portfolio out and reach some milestones. The first milestone in my eyes here is $100 a month on average in dividend income. And we'll think of future milestones along the way here once we hit that number. So as you can see, the value over time has remained pretty flat, more or less. And we have this big spike toward the end here. We'll see this, hopefully continue rising as we continue making contributions into the portfolio and as our dividends get reinvested. The plan is to do monthly portfolio updates. Maybe we'll do them more frequent than that, but that seems like the right cadence, at least for now. And we'll talk about what positions are doing well, if we remove any positions, if we add positions into the portfolio, and we'll go over all the dividend payouts and the purchases along the way. So I appreciate you guys following along with this portfolio. If you have any comments, suggestions, etc., feel free to leave a comment down below. And once again, this portfolio will be shared in the description of the video if you want to dive in any further detail or set up your own account in M1 Finance. But thank you for tuning in, and we'll hope to see you on the next portfolio update.